Ambrose Omodian, Chief Research Officer, Invest Data Consulting, joins us to share this. Ambrose, good afternoon.
Yeah, good afternoon.
What are the key factors weighing on the market? We've seen markets opening the new month of September in negative sentiment. We also see closed October down. What's driving this negative sentiment? Or what's weighing on the markets right now, Ambrose?
Yeah, actually, what we're seeing is part of market dynamics. There's no need of flogging the negative sentiment. After market are rallying for straight, 5 months, they feel that in the month of August, September, after August, are kind of a pullback to gain marginally. Then this start of September, we expect to see a mixed market. And the first trading day, we have seen a negative market. But for me, there's no cause for alarm. Look at the volume that put the market up when the markets were rallying. The same volume is not there now, bringing the market down. It tells you that many investors are still sitting to watch activity that will unfold in this month. Especially, this is a month that we expect to see some economic data that will give investors insight, coupled with the expected MPC meeting that's coming this month. For me, the start of September, up and down or red, for me, it's not a big deal. But we're expecting to see, let those companies that are here to release their audited account, especially the banking that paid the interim dividend that are delaying. Don't forget that in the history of our market, in the month of August, we expect to see the early filers of these banks releasing their number. Up to this hour, none of the dividend paying banks in the market has released their number. That is a concern of many investors. I believe that it's time for also the regulators to consider things that is very, very important at this point. Why I would say that the same banks came to the market to raise their money after the central bank said, oh, this bank that has which retained earnings should not go back and use the retained earnings to recapitalize. It should go back to the market. And the investor, out of the confidence they have in the banks and also in the economy, they came out and injected their fund into this bank. Then expecting that this bank that paid into the dividend expect to reward these shareholders. At this their half-year result and also at the end of the year. Until now, they've not seen the result. I think that is the concern we're seeing, that most of the banking accounts are in red. But I believe that the fundamental of those banks still remain very strong. A pullback in those banks provides an opportunity for investors to key and into their price, because in this market it's buy low and sell high. That is the mantra. And also, if you understand how to do that, you make money in the stock market in any direction, either in the bull market or in bear market.
Do you think that this delay in the bank results is what is really causing the cool-off we're seeing in the overall equities markets?
The question is not clear. The audio is very bad. I'm trying to repeat. Yeah, I didn't hear you.
I said the banking stocks, do you see the delay in their results, is it what is causing the pullback we're seeing in the market?
Yeah, no, I'll say that the delay is part of what is affecting the investor sentiment as we speak. And also, if you look at the history of our market, each month has their own characteristic. September comes with a mixed characteristic, which also I'm not surprising at the beginning, in red. It's expected that towards the end of September, we expect to see an up market, because that is the time many of market players, both traders and investors, will be positioning forward for the third quarter earnings season that will come, that will kick off in October. But good thing is that the Policy Manager Index that came yesterday from Stanbic IBTC shows that yes, their business activities is still expanding, about 54.2. For me, it's a good one, it's a good sign. But I think inflation will also determine what the CPI will be doing. But an economy that wants to achieve 4% GDP, it is time to start bringing that cost so that you can drive growth and also expansion in the economy. But all eyes are still what is happening in the economy, because those big central banks of the world have already given sign of cutting rates in September. Are we going to go in that pattern, in that direction? It depends on our policy managers here in Nigeria. I mean, with the MPC meeting or MPC committee. Yeah.
So do you see the markets, reversing and going to the green at the close of business?
No, for me, at this time, this pullback is an opportunity to buy low and sell high. There's no cost for allowance. Let investors invest with knowledge. It's not time to follow bandwagon. It's time to know who is really intelligent investor or who are those following bandwagon. The pullback, most of the leaders, most of the sectors are bouncing back easily, like you can see. And also, they are also maintaining some stronger defensive nature with their fundamental and their price. For me, it's time to key into good company that has value. And so the upside side, the upside is also a good one that you can make money at the end of the day. Especially, don't forget that the last quarter of the year is the most active quarter anywhere in the world, and that's what September will usher us to, the last quarter of 2025. For me, there's no cause for alarm at all.
Thank you so much, Ambrose Omodian, Chief Research Officer, Invest Data Consulting, for your insights.
Thanks for having me.